Good afternoon. Let's do some business. We are doing it live right here, weekday afternoons at 4 o'clock. We get right down to business here with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air right now on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks closing mixed today in what turned out to be a choppy session of trade. We did get a bounce early on, but the steam came out of the rally. Fed Chairman Jerome Powell back in the spotlight, saying a delay in cutting benchmark interest rates could be in the cards if inflation remains a threat to the Fed's 2% annual inflation target. The Dow coming in for a closing gain of 64 points. The S&P 500 slipped 10. The Nasdaq ended down by just about 20 points. Investors keeping an eye on key interest rates, seeing them take another step higher today. The yield in the 10-year note, that's the one that impacts the fixed-rate mortgage rates, moved up to 4.66%. Fed Chairman Powell indicates that policymakers will have to delay any interest rate cuts, and the IMF projected faster economic growth for the U.S. this year, which could also add to upward pressure on rates. The outlook for the global economy is for continued solid growth and declining inflation, bolstered by stronger than expected growth in the U.S., according to what the IMF had to say today in its latest update in the World Economic Outlook. The IMF projected growth here in the U.S. at a 2.7% annual rate this year, and that's 0.6 percentage points higher than the forecast they put out in January. We also heard from the Fed chairman today saying the recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. He spoke today at an event sponsored by the Wilson Center. He had never pointed to a specific meeting where rate cuts might start. In his remarks, he also noted that inflation has declined quite significantly over the second half of last year. But he said inflation numbers that came out over the past week indicate the 12-month annual inflation rate, as measured by the Personal Consumption Expenditure Index, which we're told is the Fed's favorite inflation gauge, is estimated to rise at a 2.8% annual rate in March. Little change from February, and shorter-term 3-month and 6-month measures are likely to be even higher. Nervous time in the Middle East following Iran's attack on Israel over the weekend. Israel vowing to retaliate against Iran, risking further expanding the shadow war between Israel and Iran into a direct conflict after that Iranian attack over the weekend sent hundreds of drones and missiles toward Israel. 99% of them were shot down, according to the Israeli military. Oil markets, of course, nervous. We see oil slipping slightly today, down 5 cents to $85.36 a barrel, and in London, down 8 cents, still above $90 at $90.02 a barrel. Shares of trucking company J.B. Hunt Transport Services moving lower by 6% today in an extended session after the transportation company reported drops in its quarterly profit and revenue after weaker demand. Taking a look at what's happening in the EV world, EV sales have slipped into reverse lately. In response, for example, faced with a cooling of demand and investor concerns about profits, Tesla this week reportedly conducting substantial job cuts, sending a memo to staff announcing layoffs that could affect more than 10% of its workforce globally. Also, there are new cybersecurity concerns focused on EVs these days. Meanwhile, car insurance rates, in case you hadn't noticed, are rising at the fastest rate seen in nearly 50 years. I'll talk cars this afternoon with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast. But first, on your money, the markets, and the economy. Joining us live now, money manager Gabriel Wisdom, managing director at American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for coming to the line here this afternoon.
Well, thank you, Frank. It was quite a day, and it was really all about the rising cost of money. In addition to Fed Chair Jerome Powell saying that it's going to take longer than expected, and he's actually backpedaling, pivoting again from the expect interest rate cuts sometime later this year because the data doesn't support it. But now another bank, major bank, UBS, has chimed in with their recent commentary saying that if the expansion of our economy remains resilient and inflation gets stuck at the 2.5% or higher level, there's a real risk for the Federal Open Market Committee to resume raising interest rates again by early next year, reaching 6.5%. Now, that's the same prediction that Jamie Dimon made in his shareholder letter to J.P. Morgan Chase shareholders, saying, get ready for higher rates, not lower rates, higher. And it has a lot to do with all the money that was printed coming out of COVID. An astounding 26% of additional capital was printed and went into the money supply, and now we pay for it.
Right, and I believe former Treasury Secretary Larry Summers also thought perhaps that rates would be going up, not down this year, based on upward inflation pressures, including, of course, on energy prices, most notably, and even more so now with the upheaval in the Middle East, with oil hovering around $85 a barrel, and the price of gas in Los Angeles, for example, about 40 cents a gallon higher than where it was just a month ago. If you can put your economist hat on for just a moment, where do you see inflation go from here?
Well, you know, Frank, the Tax Cuts and Jobs Act of 2017 will expire at the end of next year. And we had something coming out of COVID that a number of lawmakers really embraced called modern monetary theory, MMT. And it's really not modern. I wouldn't say it's monetary, and it's hardly a theory, but the idea was that the government could print all the money that it needs until there's inflation. And then modern monetary theory argues that inflation could be addressed by increasing taxes to reduce spending capacity. Well, good luck with that when clearly going into an election period, both sides are talking about taxes, and it's very clear that legislators want to raise taxes. So we're getting rising interest rates. That has always been the fix, and we're going to see higher rates.
As a matter of fact, later this hour, I'll be speaking to Paul WINFREE, former President Trump advisor, who now heads up the Economic Policy Innovation Center, about those expiring tax cuts next year on this day after Tax Day. Hope everybody, did okay here on this April 16th, coming off Tax Day yesterday. So that is a big concern, and we'll be talking more about that. Obviously, the upheaval in the Middle East causing a lot of nervousness in the financial markets. With what's happening and what could still happen here, what is the mood that you're picking up among the folks you've been talking to today?
Well, Frank, I was looking at what Oxford research has to say. Oxford Economics Global Economic Model is assuming a sustained increase in oil prices up to $100, maybe $110, $120 per barrel because of tensions in the Middle East. They predict that these will continue to put upward pressure on oil prices, and the economic costs of the U.S., well, they're pretty obvious. But the good news is, based on their modeling, they don't see higher oil prices taking more than maybe shaving off a little bit of gross domestic product. We can handle it, but I would say get set for higher prices at the pump.
All right. Well, fasten your seatbelts for that one, and we'll be talking to our auto expert, Lauren Fix, about that. Curiously, EV sales are down in the face of these higher gas prices, interestingly. And let's take a look at gold for a moment, which has been racking up a string of record highs. In fact, looks like it's above $2,400 here as we speak, down about $6 to $2,401.40 an ounce. Silver, of course, also has been along for the ride. This at a time when we're told inflation is supposedly easing, all of a sudden gold at record highs for the last couple of weeks. What about gold here?
Well, it's interesting. Gold is telling us quite differently that inflation is very real. It's here. The central bank's gold holdings account for almost a fifth of all the above ground gold that's ever been mined, and banks, central banks, including our own in the United States, have been accumulating gold recently. And in terms of its rarity, I was reading recently that if you were to put all the gold that's ever been mined, and it's still here, all in a big cube, it would only measure 72 feet on each side, which is a couple of school buses side to side on the long ends, there's just not much of it. Silver, is plentiful, but it's got a wide, industrial utility, I'd say. I'd like them both still.
On there live with money manager Gabriel Wisdom with American Money Management. Let's go back to the car names here. Tesla, for example, has had a rough ride lately, and some of the other EV names, including Fisker, of course, most notably having serious financial issues now, as we've heard, and some of the other ones too. Even the Chinese so-called Tesla of China, NIO, has pulled back from its highs. Right? What about what's going on in the EV world in the automotive space?
It's very interesting, Frank. Elon Musk said in his company memo that as part of the effort to continue to move forward, he's made the difficult decision to reduce the headcount by about 10,000 workers, 14,000 workers globally, and it's because they're not selling cars like they expected to. There was some concern that the next gen vehicle for Tesla, which is supposed to start around $25,000, would be sidelined. Musk says that's not true, that it's false, and he says there's a Tesla robotaxi coming, but he has complained loudly that high interest rates and higher overall prices are a big hindrance to EV adoption, and we're seeing it not just at Tesla, but throughout the auto industry.
In the meantime, we see Tesla back below 160 here, down more than $4 today at 157 and change, and that stock has pulled back about 37% since the start of this year. We're keeping an eye on that one. And let's talk about, of course, Tesla is considered to be one of the Magnificent Seven, which we've been talking lately. It's been down to the Fab Four and maybe even just the Magnificent One, and that would be NVIDIA, which moved higher today, by the way, up about $14 at $874 and change. What about the Mag 7, the Fab Four, and or the Magnificent One?
Well, they're all pretty great, honestly, for these companies who've been able to leverage off disruptive new technologies. Their profit growth and revenue growth has been particularly strong regardless of market conditions. You can go back only 2 years to 2022, and share prices of every one of those companies you mentioned declined a lot, while on balance their earnings rose. So if you think about all the narrative about concerns expressed about the stock market and the overall economy's addiction to cheap money, that may have something to do with it. NVIDIA is extremely strong because it's the prettiest girl at the dance. Microsoft is making a $1.5 billion bet on another form of artificial intelligence, or AI, with the United Arab Emirates. They've got an artificial intelligence firm called G42, and Microsoft will be providing all the cloud storage for it. So, AI, chips ahoy, this is all a great and sustainable theme going forward.
All right, what about Apple, which is also part of the Mag 7, which has pulled back this year, down about 12% since the start of this year, as a matter of fact, down to around 169 and change here today. What about Apple here?
Apple is I think a great long-term hold at these prices. You want to buy when the sale happens at Nordstrom's or wherever you shop, and Apple is going on sale based on just a fundamental viewpoint. They've got $73 billion in cash, and at 5% interest rates, every $1 billion generates $10 million in interest income.
Mike Carruthers shares little pieces of intel and interviews you can use to improve your life on the Something You Should Know podcast.
The next time you're looking for a job and have to write a cover letter, here's some advice from Skip Freeman, author of a book called Headhunters Hiring Secrets. Add a PS to the bottom of that cover letter. That can actually increase the chances of that letter being read by up to 75%. Some people actually glance down and read the PS first.
Something you should know. Search on YouTube or wherever you listen.
So take 10 million times 73 or 73 billion. I mean, Apple's just a cash machine, it's a cash cow, and they're all part of this AI rollout. So I think you'll see all the Mag 7 stocks eventually go on sale. Apple is certainly there right now.
All right, zooming out to the big picture, of course, we had that record-shattering first quarter, and now a sluggish second quarter here. Is the party over, or what do you see ahead for this market this year?
You know, I think there are some problems with regard to inflation that are putting, well, they may be tapping the brakes. Rent and shelter as part of the Consumer Price Index, that was up 5.7% through March, down a little bit from the peak, but still up. Home, health, and auto insurance up quite a bit more than that, some 7.8%. That's up from March. Auto insurance up a whopping 22.2%. That's major inflation. And finally, the health insurance area is what Ed Yardeni calls a funky component of the Consumer Price Index, extremely volatile, but it was up some 28.2%. So this all has some effect on the markets and the economy.
All right, at this point, Gabriel Wisdom, where are you putting money now and or taking it off the table?
Well, Frank, I'm betting on no rate cuts for the remainder of the year and very likely higher interest rates, because these interest rate cycles last much, much longer than people expect. Most of those who are in the workforce and financial services industry have only known declining interest rates the past 30 plus years. Now we may be in a long cycle of rising rates. So I like the companies that have a lot of cash. Goldman Sachs Group, symbol GS, has $241 billion in cash. Alphabet or Google has some $112 billion in cash. Morgan Stanley, MS, $89 billion in cash, had a good day today. Amazon, $86 billion in cash. Microsoft, Alibaba, Apple, I mentioned, Meta, Fidelity National, the title insurer, FNF, got $53 billion. Taiwan Semiconductor, $53 billion. These are the companies that I'm looking at right now.
All right, terrific, Gabriel. Thank you very much for taking the call this afternoon. That's Money Manager Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Thank you very much for taking the call with us here. Thank you very much. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destinations that they might not have a plan in place in case there's an accident that is not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone, and that number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call, 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC, and we welcome the band War coming to the LA County Fair on May 3rd. It's that time of the year, for corn dogs and cotton candy. Don't miss the country's largest county fair, the LA County Fair. This year's theme, Stars, Stripes, and Fun. Tickets on sale now at lacountyfair.com. And right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Mottek On Money continues here in 790 KABC. Mixed finish for the stock market today on this day after tax day, April 16th. The Dow coming in for a closing gain of 64 points, well off its high of the day. We were up about 150 early on. We're at 37,799 here at the close. The S&P 500 closed down 10 points at 5,041, and the NASDAQ down 20 at 15,865. The yield in the 10-year note at 4.66%. In case you hadn't heard, it looks like mortgage rates are at the highest we've seen so far in 2024. With the latest spike in benchmark bond yields, the average rate on a 30-year fixed-rate mortgage here in the U.S. is now 7.43%. That is a new 2024 high. We've not seen mortgage rates this high since early December of last year when the Fed said rate cut talks were premature. Stay tuned. Taking a look at the cryptos now, we see Bitcoin up about 1,000, back to 63,674. Wild moves in Bitcoin lately. Ethereum up 15 at 3,083. Doge back to 16 cents. Taking a look at some of those Mag 7 names now, we see Microsoft moving higher today by 94 cents at 414 and change. Meta slightly lower, down 47 cents at 499 and change. Tesla, which we'll be talking about later this hour, down more than $4, back to 157.11. Apple down 331 at 169.38. Nvidia moving higher by more than $14 at 874.15. Amazon down 30 cents at 183.32, and Google down 46 cents at 154 and change. The price of gold down $6 at $2,401.80 an ounce. Silver down 14 cents at $28.24 an ounce. Mottek On Money continues here, 790 KABC, day after tax day. Year-round, we advocate for you, the taxpayer, in case you hadn't noticed. Let's talk about the economy and tax policy now with Paul WINFREE, former policy advisor to President Trump, who now heads up the Economic Policy Innovation Center, which is also known as EPIC. Love that name. By next year, by the way, many of the Trump-era Republican tax breaks established by the Tax Cuts and Jobs Act of 2017, which Gabriel Wisdom referenced earlier, that will be expiring. Paul WINFREE, president and CEO of the Economic Policy Innovation Center, testified before the House Ways and Means Committee recently about this, and he joined us live this afternoon. Paul, thank you very much for taking the call here today.
Thanks so much for having me. I appreciate it.
Hope you made it through April 15th okay, and take it from the top and tell us what's ahead here if things don't change as far as tax policy is concerned and those great tax cuts that are set to expire as of now next year.
Well, I hate tax day so much that I try to get it out of the way as quickly as possible because, if not, it's like pulling a Band-Aid off, But yeah, so as you mentioned, we've got a bunch of tax cuts that are expiring next year. So if folks remember, back in 2017, President Trump enacted the Tax Cuts and Jobs Act, and there were two main components of that. The first component was the business side, or the corporate tax cut. And essentially, it took the corporate tax rate from 35% to 20%. But the most important part of that wasn't just the corporate tax cut that made our businesses more competitive internationally. It also incentivized businesses to repatriate income, or in other words, take income that they were making overseas and invest it back in America. And what that did is it stopped inversions or companies from moving or setting up headquarters in other countries in order to avoid U.S. taxation. And what we saw after that was an increase in domestic investment, additional jobs, economic growth, higher wages. I mean, listeners will probably remember that several major companies, including Walmart, increased wages and gave bonus payments as soon as the tax law was passed. And then the second part was the individual tax cuts, where all of the rates were reduced, and there was a major increase in the standard deduction, which reduced the tax liability for American taxpayers in every tax bracket. Well, all of those tax cuts are expiring at the end of next year, which would raise taxes on the...
Our house is a mess. Come on in. I'm Amber Wallen, internet comedian and host of your new favorite podcast, Fly on the Wall.
Okay, that's pretty presumptuous to assume that this is going to be their favorite podcast, by the way.
Anyway, that wasp that you just heard interrupt me is my husband.
And co-host, Benjamin Wallen.
Listen in as we discuss relationships and keeping our sweet baby kid alive.
Fly on the Wallen, wherever you listen.
The average income earner by about 7.5% unless they're extended.
And we heard President Biden in that State of the Union speech talk about raising taxes, right? If all that goes through, what's that going to look like?
Well, look, I mean, basically there are two competing philosophies. The first philosophy, which is invested in the Tax Cuts and Jobs Act, is a reduction in the marginal tax rates, a broadening of the base, and a simplification of the tax code. The reality is the tax code is still too complex, right? I mean, I was just reading the other day, there was a letter that former Secretary of Defense, Donald Rumsfeld, used to send to the IRS along with his taxes every year, where he said, look, I have literally no idea whether or not my taxes are accurate, because nobody knows whether or not their taxes are accurate because our code is so complex. That's still true today, and there's a lot more that can be done. But Joe Biden's philosophy, and the general philosophy on the left right now, is to increase marginal rates, increase the standard base taxes, but then to provide more carve-outs for things that they like, for folks who are part of their coalition. So if you're in the green energy business, you get a tax break. If you do other things that they appreciate, that they like, then you get a tax break. But if you're not part of their coalition, then ultimately you pay those higher rates. And we used to have a name for this. We used to call it public corruption. But now it's the philosophy of taxation that's reflected in President Biden's budget, and ultimately that's what he will try to enact next year should he be reelected.
And you mentioned this green agenda, and of course the government's been pushing the electric vehicles, and as we've seen recently, EV sales have stalled, and Tesla doing some dramatic cuts here now. And what about those tax credits related to EVs and government policies pushing electric vehicles? What do you expect ahead there?
Yeah, so there were some significant tax credits that were put into the Inflation Reduction Act that Biden ran through the Democratic Congress a couple of years ago. And one of the things that we've seen is that when the CBO, which is the official record keeper, accountant for Congress, initially scored those credits, they thought that they would only cost about $150 billion. Well, now some of the big banks think that they're going to cost the federal budget or the federal taxpayer about $1 trillion. So we've seen cost overruns. We've seen them subsidize basically bad business models. I remember, folks probably remember Solyndra from the Obama years. Well, I'm sure that there are probably hundreds of Solyndras out there that are going to start popping up here any minute now, that we just don't know about them because they've been so blanketed over by all these subsidies that have gone out the door over the last 48 months.
Taxpayers on the hook for a lot of that?
Oh yeah, of course. Taxpayers are on the hook for all of it. I mean, it wasn't just the Inflation Reduction Act. There was also the ARPA, or the Build Back Better bill, that had $1.9 trillion in spending in it, and again, it's gone to subsidize preferred businesses, and ultimately, there's no way for us to know until that goes away how successful their models are or not. So yeah, I mean the taxpayers are 100% on the hook for all this stuff.
All right. Anything else, Paul, that's top of mind? You're one of the great taxpayer advocates out there, which includes Republicans and Democrats, I should mention. Anything else that's on your radar screen here at the moment?
Yeah, thanks so much. A couple things. The first thing is that one of the things that I'm becoming much more concerned about is the debt. I mean, the debt's always been a concern of mine, but debt service costs are higher than they've ever been before. Interest rates are higher than they've ever been before, and that's the markets trying to send us a signal, trying to send Congress a signal that they need to get spending under control. And we have $8.9 trillion in maturing debt this year that the Treasury is going to have to go back to debt markets to refinance. At the same time, we have $1.5 trillion in deficits projected. So, quite frankly, the borrowing situation right now, along with the with the Fed's money printing and their inability to get inflation under control is a serious concern. And I think that, we really are going to have this come to Jesus moment in the near future and get the debt and deficit under control.
Paul, thanks very much for covering all the bases here this afternoon on all these important issues here. Paul WINFREE, President and CEO of the Economic Policy Innovation Center, also known as EPIC, who testified about all this recently before the House Ways and Means Committee. That was a big deal, Paul. We appreciate you sharing your thoughts with us here this afternoon.
Anytime. Thanks so much for having me.
Mottek On Money continues here on 790 KBC. Good afternoon. Time to talk cars. Have you noticed your car insurance bills probably gone up a lot? Car insurance rates, as it turns out, rising at the fastest rate we've seen in nearly 50 years. Inflation definitely impacting auto insurance. Also looks like Uncle Sam will soon be in your car, it looks like. The National Transportation Safety Bureau urging automakers to install so-called intelligent speed assistance technology in all new vehicles that at a minimum warns a driver when the vehicle is speeding. What is intelligent speed assistance technology? We're going to talk about that with someone who knows all about that. And cars also, the EV world has been slipping into reverse lately, and Tesla's been in the spotlight. The stock's been moving lower, and Tesla's also cutting jobs. Let's bring in our go-to car expert now, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, good afternoon to you.
Good afternoon. Yeah, there's a lot going on in the automotive world, that is for sure.
Yeah, with inflation top of mind, what about these rising auto insurance rates?
Well, there's a couple of reasons why insurance rates are up. So they're finding on average they're up about 22%. So if your policy is expiring soon, start shopping around. There's a bunch of places you can go online, call your local insurance agent, have them shop around or you shop around. The reason is 22% increase is a lot. But some people are getting as high as 60%. Some people are getting canceled for no reason. Like, I wasn't speeding, I didn't have an accident. Why would they cancel my policy? Well, believe it or not, the data that's being collected by your car, which has been collected for years, since the early 2000s, was initially used for car manufacturers to find out, there's an idling problem or there's a performance problem or maybe the car doesn't get the best fuel efficiency, and they would do those automatic downloads and they would collect your data. Well, now car manufacturers are needing ways to make money. They did try the subscriptions, as we remember, the heated seats and all that. That didn't go very well with you. The people pushed back very heavily, and all the car manufacturers changed their mind on that. But what did happen was they said, what are you going to do with this data? We're going to sell the data. So they sell it to the federal government, and they also sell it to your insurance company. So your car is actually snitching on you, and there's nothing you can do about it. And the results have been a lot of people realizing that their insurance rates have gone up dramatically because car manufacturers need to make money. The cost of repairs of cars in general have gone up. Parts are hard to get. Electric vehicles and hybrids cost more to repair, so the rate for everybody goes up. But if they're collecting your data and they think, Frank, you've been driving kind of aggressively on the highway and you've been over the speed limit. This is all done by a computer. This is not done by a person. You made an aggressive move around a squirrel. I wouldn't know that. I'm a computer. I only know that there's been some aggressive maneuvers. Therefore, your insurance rates get increased.
On the air live with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. And looks like the state of California and Uncle Sam possibly might be in the car with you soon. I see you've written about this, Lauren, about this new bill mandating cars having this automatic speed limit. Tell us what we need to know about that.
Yeah, it's stemming out of California, but the National Traffic Safety Bureau wants to put it in all cars. Basically, if it happens in California, it's going to happen across the whole country. They're not going to build one car just for California. And they don't want you to be able to go anything more than 10 miles over the speed limit. Now, you may say, well, that's great. Speeding, less accidents, people will be safer on the road. But there are times, and we've all been there, where you have to accelerate away from something, avoid some situation, a car going the wrong way down the highway, anything you could think of, a million different things to get away from an accident or get away from something that's going to hurt you, and it won't let you do that. So in this case, there'll be a button to override for 15 seconds, just 5 miles additional over the speed limit. I really am better off saying, in my opinion, is that you should be able to make those decisions based on driving. If you're a safe driver, then that's great. You should be a safe driver. But if you're in need to escape a situation, you should never be limited because the other person chasing you probably doesn't have that. And it's going to lead to a lot of issues. People are very concerned about that, for sure.
Yeah, some excellent points there. What about the new cybersecurity concerns focused on EVs and other vehicles that are hooked up to the web and all that? What's the latest on cybersecurity related to cars?
This is really interesting. People don't think about when you charge your car at public charging, you plug it in. If you've got free charging, you get it. If you pay for it, you do. Well, what it's also doing is giving that station, that location, whether it be public or private, connection to your car. So we all connect our phones, Apple CarPlay, Android Auto, we've got Google, we've got all these great things in our cars. But that technology is also giving access to the charging station, and because there's no firewalls, they've got a problem even with some home chargers that are actually taking your information from your car, because you'll put your home address in there, you might have some phone numbers, maybe some additional information. Well, all that is available to whatever hacker has hacked into those charging stations, and this is becoming a larger problem. Initially, there wasn't any of these problems, but it started in Europe. They had about 295 cybersecurity incidences just last year, but this year it's already double that. And it's really a concern because it's happening literally everywhere, not just in the United States, not just in Europe. It's happening in Israel. It's happening all over the world. So if you have a password on your charging connection, make sure you keep changing that password. Don't connect your Apple phone, or at least don't put your home address in it. Use your phone instead. When you're charging, disconnect those things, because these are the problems. This is how they're getting that information. That includes your credit card information, because we do store that sometimes on our phones, which are connected to our car. And when they're connected, you're giving up all that information. They've got to come up with a solution, and right now there is not one.
Oh, lovely. Well, and again, focused on that problem, focused on EVs, which are already having a sales issue, right? Look at what's happening with Tesla and some of the other big EV names having some serious financial trouble at this point. Why don't you give us an update on the EV world here at the moment?
Okay, well, it's kind of sad because no one wants to lose their job, and we don't like to hear anyone losing their job. But Fisker is the first one that's in the biggest trouble right now. They're out of money. They're unable to produce cars right now. They had a huge discount. So if you purchased a Fisker at $60,000, a very cool vehicle, they're now selling them at $21,000. So you already just lost quite a large amount of money on your vehicle. Resale is going to be a challenge. Getting parts and service will also be a challenge. Other companies like Faraday have been unable to pay their rent for their facility. And on top of that, the number one electric car manufacturer is Tesla. They're letting 10% of their employees go worldwide. Now, we're not sure why. Elon Musk says that it's because he's reorganizing how he's producing the cars. Maybe so, but when 10% of your staff is being let go, your sales are down, your inventory is up. It immediately says to me that they've got some financial issues. It won't put them out of business because they're too big for that, but most likely you're going to see some changes going on over at Tesla. They'll still survive, but the others maybe not.
All right, Lauren. Well, thanks very much for that comprehensive update. As always, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, and well-known on the financial networks these days, and especially on this program for a terrific analysis. Lauren, thank you again for taking the call today.
Thank you.
And coming up next, it's the 790 KBC News Blitz with Randy Wang. I'll be doing more at 4 tomorrow afternoon. Mottek On Money, 790 KBC.
Our house is a mess. Come on in. I'm Amber Wallen, internet comedian and host of your new favorite podcast, Fly on the Wall.
Okay, that's pretty presumptuous to assume that this is going to be their favorite podcast, by the way.
Anyway, that wasp that you just heard interrupt me is my husband.
And co-host, Benjamin Wallen.
Listen in as we discuss relationships and keeping our sweet baby kid alive.
Fly on the Wallen, wherever you listen.